Mid caps are, up about, 1/10%. Small caps, on the other hand, it's up about, 4/10%. So small caps at this point is outperforming the benchmark indices as well. But on that note, let's quickly get on board with our fundamental guest for the show. We have Aishwarya Dadish of Fident Asset Management. Aishwarya, good morning. So good to have you back.
Good morning, Lavisa, and good morning to all your viewers.
Aishwarya, let me start off. Donald Trump's comeback. And he did mention that he will begin overhauling the US trade system to protect the Americans. The talk of tariffs, how much do you think that the Indian markets have priced in? He didn't talk about much about tariffs, but we can expect that, he will be heading off to the tariff plans as well.
Yeah, so obviously that is the talk of the town. He
Mm.
took office yesterday. I think he have started with focusing initially on energy, but I think we should all be prepared. There is a rhetoric in building up that he will be mostly after China, but we believe that he will go ahead and try to be bring up things which will be beneficial for US. Whether it's coming from any part of the world, whether it is India, Mexico, Canada, and all of that. But at the same time, Loisha, we believe that he's a businessman. He understands that bringing too much of disruptive trade tariffs and things like that will eventually hit their inflationary trend, will hit their growth. Tariffs and trades are not good for the global, commerce and trade. So when and on the other side, when they are grappling with the issue of inflations and interest cost, which is much higher, I think he will find out a midway. So obviously he's a disruptor, but I believe being a businessman, he will somewhere settle in between and create policies which will be beneficial for US. I believe for China and India, we have to be prepared. Most of the businesses have to be prepared how the policies will look like. And I think it will happen over a period, gradually over a period of week or 10 days. Nothing in a hurry. And best there's a thesis that China plus one can get benefit out of this in the coming times. I think those are we'll have to wait and watch because I think he will put a blanket policy shift toward other developing and countries like China and India. So we don't expect ourselves to be on a good side, is what I'm trying to indicate here.
Okay, all right. You don't expect us to be insulated as well from the tariff threat that he has been giving out as well. But Aishwarya, the US dollar index that did cool off yesterday, but it has climbed to more than 2 year high. So what does it mean for FIs, which is looking at emerging markets like India or anything else as well?
So I think that is the joker in the pack. We saw when Trump came back to the power, and when at the same time we saw a lot of this data, macroeconomic data in US started to show improvement. So both of these fueled the rally in dollar, and we started seeing majority of this emerging market currency dwindle in front of it. And obviously, we have seen the burnt. We have seen we are at almost all-time low in INR compared to USD. But because of the RBI intervention and the use of forex that we did over the last 2, 3 odd months, we have been one of the better performers amid the whole basket of currencies. But it's not a good situation to be in. Obviously, bringing competitiveness to the economy and all that, but this is not what we are looking for. And when we connect it with FIs, who were already selling India from second half of calendar 2024, they see their return dwindling because of depreciating currency. So it basically accentuates the whole process of selling. So if you see so far in this month of January, we have already seen a number close to 47, 48,000 crore of selling. 3,000, 4,000 crore of selling per day is been coming a norm. And there was a fear that when Trump comes to office, he will come with a lot of fanfare and fireworks about tariffs and trade, which initially should strengthen the USD against other currencies, and this selling could possibly accentuate further. And I want to bring that point. If you remember 2, 3 months back, there was a lot of broha about China being the darling, and all this money was trying to move to China. That trend is also reversed after Trump taking over office last 2, 3 months. So strengthening of dollar is not good for FI selling from India perspective. Is not good from currency perspective. And I somehow believe that give it some time, let him settle down, give it a month or so. I believe the reversion to mean will happen. I don't expect too much of disruptive things coming out of the whole saga. And I believe eventually dollar will settle down, and possibly a lot of this depreciation can revert in coming 2 to 3 months.
Okay, all right. Aishwarya, also, apart from that, if you look on the geopolitical front, he's also tried to say that, he'll be able to solve the Russia-Ukraine war as well. So what does it mean for oil prices and what does it mean for India on that front?
So I always say history doesn't repeat, but it rhymes, right? So when I see his last tenure from 18, I guess, right? We so those 4 years we have seen lesser of geopolitical turmoil globally, and we are good at extrapolation, Larissa, right? So we extrapolate that the same trend will continue. Incidentally, we saw Gaza just before he took over office, that ceasefire that happened, and we expect that the Russia thing should also now get settled down, and don't really expect too much risk on geopolitical side. So I think then crude will completely be play on China and Europe is what my understanding is. We are already seeing crude prices stabilizing over the last 2 3 weeks from a low. I think it is already up $17. And if we see China remain in that comfortable zone of not getting worsened from here onwards, I think crude can swiftly stay here for at least say 2 to 3 quarters. It will be very difficult to give a view about how things looks like in future, but I think China will be the more important determinant from demand perspective on how the crude will look like. We are expecting on geopolitical side things will settle down, and that will not adversely impact crude, and that will not adversely impact Indian equity market per se.
Okay, all right. It kind of would be remain on the sidelines as well. But Aishwarya, you did mention that the tariff rhetoric that Trump has been talking about, India would also not remain insulated. So if his tariff plans do get imposed, that means that inflation concerns could get dialed up. So what does it mean for India on a macroeconomic standpoint? Because we have still not begun our rate cut journey from the RBI. So what does it mean? Can we expect that this could also even more further delay the prospect of a delay rate cut?
So, I think there's a great question. So if I come to the second part of it, I believe we should not expect deep cuts in India from now being. Not only just because what the Fed rate cut trajectory looks like, which has been deferred more or less, but it is also because of the currency depreciation that we have witnessed over the last 2 3 months. It's become very important. It will become very difficult for RBI to go on and cut rates and defend its currency at the same time. It's a trifecta of currency growth and inflation, which will become very very difficult. And coming on, when we talk about tariffs and trade, the first thing it normally will have is a rise in inflation. This is one of the most inefficient way of doing commerce globally, right? You are like when you talk about India, right? When US is our biggest export partner, and if we expect big tariffs and trade levies being put on a lot of this export things like that, it will disrupt the whole trade. Inflation will obviously pick up in US. It will also be passed out to other emerging countries, and India will not be a beneficiary, or it will be on adverse side of it. So the inflation trajectory will now depend on how those trade tariffs will look like over the next 2 to 3 months. And that's why I think most of the central bank will not be very eager to go and take a quick call before they really see what's going to happen in the next 2 to 3 months. So, as I said, obviously Trump is a businessman, but he is a disruptive businessman, right? So we should be prepared on that. And it's not just only India, also. If you look at Vietnam and all of these countries which have actually benefited economically because of the exports to China, all of those will also be impacted. So we'll have to see how this policy will look like. And don't expect too much of cuts from RBI, at least for this first half of current year.
Yeah, he's a disruptive businessman, to quote as you say. But does this mean that volatility is also going to be on a higher side until we have the union budget? And what are your expectations from the union budget? Do you expect that some sparks could be announced from the budget as well?
Yeah, so we'll come to the volatility part later. And now we are very close to the budget. And one thing which I have learned from this government, and I think that has been the norm, that this government doesn't bring disruptiveness in the budget session. If you see the last 6 7 budget, they have kept all the major announcement away from the budget, and they have tried to make budget as non-event as far as possible, given the way I have seen it things. So I don't expect much of a fanfare happening around budget in the month of February. Obviously, market will have its expectations and things like that. The two simple expectations that I have is the twin deficit. When you look at our fiscal deficit, which I think will be closer to 4.9% of in FY25 revised budgeted estimates, I think the government will stick on to that target. And second is on current account deficit. So any things which will keep it closer to 1% is what I think market will rejoice. And third most important thing is if you see the public capex, we started with a figure of 11.1 lakh crore to be spent this financial year. We are nowhere close to that. The 9 month period from April to November, we hardly spent 46% of that. To put things in perspective, last 2 years, that average number was close to 61, 62%. So the public capex has to really pick up. And if they come and say that they are going to do a number say 10, 15% higher than the 11.1 lakh crore that they did announced last quarter, market will really not be excited about it because they will have to at least achieve 93, 94% of the budgeted expected number for this current year. So the capex figure is important. The fiscal deficit side is more important from both debt and equity market. I think budget will be more focused toward capex than repex, and I'm not expecting any other thing on whether they will bring some changes on LTCGs and things like that. So we already have seen too much of noise around that, but very less expectations. And coming back to your first question on volatility, no doubt about it. If you see last 1.5 months, market has remained very volatile. We have seen broader market has actually started underperforming large caps. The risk of sentiment is pretty clear. And now with budget around, we have Delhi election. We don't know what Trump will do in the next 15 days. Volatility is here to stay for at least some weeks.
All right, volatility is here to stay. But with that, we are completely timed out, Aishwarya. But lovely chatting with you, and thank you so much for your time. We hope that we connect with you soon.
Thank you. Thank you so much.
All right. Let's take a quick check of the markets. Well, Sensex has extended its sell-off and it is down about 100 points. Nifty is, however, holding well and it is managing to eke about a little bit of green above that 350 mark as well. If you look at some of the sectors which is doing well, that includes the likes of Nifty Auto Index, Nifty FMCG, Nifty IT Index doing well, Nifty Metal Index doing well, and Nifty Pharma also holding strong at this point. However, on the contrary, on the flip side, we can see that Nifty Bank has seen a bit of a profit booking, down about 0.2%, and Nifty PSU banks also have managed to end up in flat in the red as well. Nifty Realty also seeing a bit of a sharp fall off, up or down about 1% at this point of time. Broader indices, however, they are faring better than what the benchmarks are indicating. So that is one promise that is holding out well for the entire overall markets as well. But with that, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3:30 p.m. for Closing Bell. We will be discussing about how the market is developed, what the stocks were in focus. Until then, signing off. Do stay tuned to moneycontrol.com for all the news updates and market insights.